All right, let's jump into it for a second take. So, actually, just went through a bit of all this sort of data and realized that it sort of stopped recording halfway through, which is always a bit of fun. But anyway, look, to be honest, let's sort of start off where we are. It is 6:40 actually now, so update this one 6:40 on the 16th of November. So moving into the second half of the week, sorry, second half of the month. Look, it's been a very choppy week in that. It's been very good actually in return in terms of sort of the analysis. I mean, if you watched last week's analysis, it was metals coming into their last hurrah, and we got an absolute thumper of a week to the top side in the metals. Actually, further, I have to admit, further than I had anticipated. So I did flip, and I was long on Monday. I was short, fairly heavy in that, sort of coming into the Friday, still holding a good chunk of it. Um, but yeah, it was the idea was basically the last hurrah, and I do think that that is potentially sort of what we could be sort of seeing here. So I'll get into that when I get in on the charts. Look, I'll fly through the data because even though sort of what we sort of what I had sort of been recording before seems very choppy with the data coming out here. So US shutdown is a big thing that's on the cards, well, sort of kind of finished at the moment. But the talk of this sort of stuff is that we're not getting CPI. I was sort of touting the idea, and I thought that was the case, that we're not getting the jobs numbers. But then I flicked through here and I got to, which is technically Thursday night, Friday morning. Apparently, at this point, it looks like we're getting non-farm payrolls, which is odd because obviously this is a Friday bit of data. Look, typically, excuse me, it's the first Friday of the month, but because we're sort of playing catch up on data, I could understand them putting it in a little bit earlier, but I would be surprised if this actually comes out, only just for the fact that I do believe, well, not I do believe, the White House or that press secretary, that blonde chick, did say that we weren't going to be getting job numbers, weren't going to be getting CPI for October. So obviously now in November is recording October's numbers. So we'll see how that goes. It still says tentative on the unemployment claims, and that is the weekly number. So this is tentative, but apparently this is coming out. We'll see how we go. If last week's analysis I did, it had CPI coming out on the Friday, um, but then when you got to Thursday, it wasn't on there. It had been removed off the calendars. So I question mark that one anyway. Look, short of that and that, it's actually pretty quiet sort of through the rest of the data. We got JPY, also Japan and that with a bit of data early. Look, I've gone through a whole sort of analysis of this, of the yen and sort of basically just how it's been so incredibly weak. I think a lot of people are sort of thinking, hey, this thing's as weak as it can be. There's a good time to get long with it. I don't know. Like, yeah, I'd be risky. I don't trade the yen a great deal or pretty much ever anymore. But I used to trade this thing around 103, 104, against the US dollar, of course. And, I think GJ, so pound against the yen, was around 135 at that time. And, that's gone up to 200. And the yen against the US dollar has been like 160, 165 or thereabouts in that ballpark. And then you got the BOJ intervening and yada yada. And anyway, the point with that is that these things are sort of, there would have been a point there when it went from 103 to 1020, I say 120 or 130 or 140, and you would have thought, wow, it's weak then, and it just keeps going and keeps going. So I think a lot of the market really wants to get long the yen, but we've got that new lady in now. I think I actually thought she was probably a little bit more hawkish, but maybe she's a bit more on the dovish side of stuff. But regardless of the point, that I think a lot of people want to sort of get long with these things, but the yen and BOJ, they just always keep saying, hey, we're going to hike soon, we're going to hike soon, and they never do. So also maybe some strong data in that sort of may get them to sort of push along a little bit, and realize that sort of, hey, we don't need to have such weak stuff if you can get some strong data. But I wouldn't hang my hat on that one there. Anyway, apart from that, typical sort of Monday, pretty quiet on the data front. We got CAD, CPI, slight little tick up over here. Again, outside CAD crosses, it's probably not going to impact too much stuff. Empire State, manufacturing, slight little tick down over here, and then a couple of Fed speakers. So the Empire State, yeah, can move the market a little bit, but again, it's a bit more of a knee-jerk reaction, unless it's like a massive shocker. or shock like up or down. I don't think it's really going to hold too much. These Fed speakers, I pretty much put Bowman, Waller, and Mirren as the Bowman and Waller were the original dissenters, and then Mirren got put in, and I think he was a Trump appointee, and he was the one that was actually calling for 50 base point cuts last time as well. Um, they're the kind of more dovish ones, and so I assume that these guys are probably going to be a little bit more sort of, if you have to be one camp or the other, it could be not central, but more sort of on the hawk. If they're not dovish, I'll put them all on the hawkish kind of sort of side stuff. And it's funny because only this year, maybe it has been this, and I haven't taken notice of it all, but only in the last couple of months, really, have I seen the market move so much on these Fed speakers. And because they come out and they speak multiple times throughout, I mean, look, this is in one period here, and you've got three Fed speakers, and this is just on one day. Later in the week, we got there's more Fed speakers down here. We got the FOMC minutes later on. I mean, what's the point of having the minutes when we hear from these guys every 5 minutes anyway? I mean, even if you look down there, you got this bar person sort of speaking, Williams speaking here. Got Williams was speaking here as well. So you know what I mean? They just kind of repeat the same stuff anyway. So yeah, it'll be interesting to sort of see how the market moves. But the point that is relevant to this is that we did sort of hear, I can't remember who was talking the other day, a Hackett or something, I think they're called. When was it? It was on Thursday night, I'm pretty sure. Around here. Anyway, regardless, let me sort of find it now. Anyway, whatever. Point is that sort of we did see a little bit of stronger, I guess again, you'd say hawkish talk, sort of saying that, hey, look, they don't see a reason for the Fed to cut in December. And the market jumped at that. US dollar picked up a little bit. Metals, that was one of the initial sell-offs of metals. And then sort of course, subsequently we saw it sort of push back up and sort of undo that move. But the point is that these kind of guys will come out and talk. The market will react. They'll freak out. They're generally good moves to if you want to try and fade it. But the idea is if you're holding a position and they come out and they say something and it just drops like a stone or takes off like a stone, whatever, I take bank on those moves because a lot of those times they're not what I call landscape changing bits of data or talk. It's just talk, speculation. Of course, a lot of this is speculation, but they're the moves that tend to sort of drift back up and do the body fill, which I'll show on a chart in a bit, and they'll sort of then you'll see the move subsequently move after that. But these Fed speakers have the ability to kind of move the market around a bit. But again, these aren't really sort of bits of sort of news data that are like, wow, okay, the game has changed. It's just, again, another piece of the puzzle that you kind of put into its place. We got monetary policy meeting minutes from the RBA coming out on Tuesday. Okay, so that's interesting. So nothing through Europe, or that's very odd that you got nothing through Europe at all on the Tuesday there. But anyway, the monetary policy meeting minutes will be interesting because obviously we had jobs numbers out this week from the RBA, and they were a lot stronger than we had seen previously, and what you would kind of sort of think that the market had sort of priced for, which, as I said, sort of like to Bullock's credit, is what she said. She said that, look, this tick up to 4.5% could just be a little bit of a blip. And we did see that. It came in at 4.3%. We had, for the unemployment, we had the job numbers come in around 50,000 against their normal 20,000 span. And we saw the Aussie dollar sort of firm up a little bit directly after. Obviously, as I've sort of said a number of times, as soon as the market sentiment goes, let's go buy a US dollar, it doesn't matter what kind of data we have as a local front for Aussie, it'll just sort of take the flow. It's the tail that gets wagged of the US dollar being the dog, so to speak. The reason that we did get a bit of a push on the Aussie though is because if you took it from where we were at on Monday, we had job numbers weak. I think we had a negative print prior. We had so unemployment tick up to 4.5%. So the two mandates they have are the jobs on one side, and then they've got inflation on the other. As of Monday, inflation was rocketing up, job numbers were bad. RBA was kind of almost in a bit of a sort of situation in which would be kind of what would be they're the conditions of what would be stagflation, which is like, slowing kind of economy, job numbers weak, and but at the same time you have inflation. And so they've got the two mandates, and the way that they react to both of these are completely opposite. So if the jobs are the only bad thing, well, you cut rates, and this is very simplistic, but they cut rates and it's a bit more easing. That makes it easier for people to borrow, and then when you borrow, you got more money, you can then hire more people, push out more production. That brings the job numbers down because got more money to go around to hire people to actually sort of do stuff. Um, so the way that the sort of the market does with that, if the jobs was the only issue, is they would sort of look to sort of have a bit more of a dovish approach and sort of cut rates. If inflation's the only issue, well, obviously prices going up, there's too much money in the system. Well, let's either hike or hold or hike, and they're not going to hike at this stage. But in this instance, it would be more a hawkish move, which in current climate is a hold. And so that would be, okay, obviously a little bit stronger for the Aussie dollar. So as they're both going up, you got to kind of pick, well, the RBA has to kind of pick what they want to battle. And that's a bit of a tough decision. Most likely, I feel personally that inflation, they would sort of tackle that first. But, there's arguments to the two. Because people sort of say, look, yeah, if you deal with inflation but don't deal with jobs, well, that's fine, but nobody has a job. But then if you do it the other way around and you deal with jobs instead of inflation, it's like, well, people are still losing jobs, and cost of living's tough, and inflation's going up. Well, that's going to be even twice as hard. But, that's not for us to sort of make the decision. That's the RBA. The reason that I'm going on about all of this is the fact that by having jobs come in stronger, that eliminates that as potentially one of the issues that the RBA has to deal with. So now they only have inflation as at the forefront as the sort of the issue that they need to deal with, and because of that, that's a bit more of a dovish approach. Sorry, a bit more of a hawkish approach. Sorry, a bit more of a hawkish approach in this sense is a hold, and Aussie dollar shot up. And as I said, yeah, it got sold into as soon as the market said they wanted the US dollar. But that just sort of explains why we got that sort of push up to the top side and what could potentially hold Aussie from getting completely obliterated at the moment. But we'll get into that when we get in the charts. Moving on, look, a bunch of tentative data. Don't really look at, even if it was coming out, it's nothing that's really going to be moving the market a great deal. We've got wage price index looking flat over Aussie. It's not something that I feel really kind of moves the market a great deal. CPI out of England, seeing a little bit of a drop over there. So, again, if inflation's sort of coming down, well, maybe they could ease a little bit more because it's sort of like, okay, well, at least it's moving in the right direction. But at the same time, 3.6 is not what they're looking for. 2, maybe 2.5, but generally 2% is the target. They kind of changed the target a bit when they were up at like 6 or 7 or 8%. Everybody did. They said between 2 and 3%, but at the moment 3.6 is still too high. So I wouldn't be surprised if you still have a bit of a firmish response to that. Moving along, Thursday we got sort of FOMC minutes. Give us an idea about potentially what they're moving for. And this is what I was saying before, though. You have all these speakers coming out all the time. I don't think it's going to be anything that's going to really rocket the market. Coming down onto the Friday, potential for NFP, but again, I question mark this, so I'll probably cover this again maybe Monday, Tuesday, see if it's still floating around, because as I said, CPI disappeared halfway through the week off the calendars. The White House, well, that chick, whatever the blonde girl is, she said that, hey, look, we're not going to see those numbers sort of coming out. Hammock, I think that was the guy that spoke the other night, actually, that sort of crashed the markets. Got Fed speaker, existing home sales. Okay, and a bunch of PMIs coming out on the Friday. US PMIs coming out here. Again, look, it's too far out before we actually get expert or forecasts for these kind of things as well. But PMIs we will get because that's sort of more managers, I'm pretty sure. Yeah, purchasing managers, so not government data. So we technically have finished. I think maybe they have to sign off one more thing. I'm not quite sure. sign off one more thing to get the US shutdown completely finished. But it seems to be on its way. All right, so in all, just recapping that, not a great deal of sort of massive data this week. Little bits and pieces, but nothing that's going to be like, okay, we're really going to be pricing hard for this thing here. All right, let's jump into the charts. What a better place to start than gold. What an absolute ripper this has been. So, recapping kind of where we were, let's jump up the 4 hour at least. This is where we were starting the week. We were down here. We had this big short closed into Friday's close there, big spike up sold into, but that was a little key indicator. Again, if you look at the sort of trigger points, the trigger point I called it was 40.30. You said above 40.30 where we're going to see these things take off. Took off, came right up into the zone. Perfect. I was like, this is great. Came down here, fluffed around, second effort failed. Okay, it looks like it's come up here. This is where we know the sellers were sitting. 41.40s, 41.50s around this zone. Second effort into it, failed, bang. What does it do? Smashes through here again. Very frustrating for that second leg there, to be honest in that. So a bit of a fumble on my behalf in that. But in hindsight, when you look at these things, why would it shoot up here? I mean, look, okay, there's another kind of reasons, and maybe this is, a moment for me to put my tinfoil hat on. But my feeling is I'm not the only person that's looking at this level. It's a pretty straightforward resistance level. We've got a little bit of a back test here. We've got the double fail down here. So what happens after you get this second fail here? Well, people go, okay, time to short. I was one of them. Bang. What do? You put your stops just above it. They take them all out and they rip this thing on a little bit further. Even with this first drop down here, this is what I was talking about just before you had that talk. Drop down, big bounce back up here through Asia. And then that's when we really got to work, sorry. And that really, bang, absolutely, that just thumped down. But all in all, you got to look at this 430, 4,030. That was the breakout point for the week. That was the call from last Saturday. Last hurrah up, came all the way back down. Look on the weekly. So I managed to rally a little bit into the end of the week. Where are we at here? 4,000. So 40.30. But if you look at this, that's a big, ugly wick. That's a big, ugly wick into the end there. So what do we sort of think from here? Look, I personally think we are in the midst of probably coming down a little bit lower. Like I've actually got a target more down around this sort of 3,700. Obviously, there's some work to be done with this sort of stuff, and we could still see a little bit of a push up around here. But with that big wick coming back down the top over here, certainly the emphasis, as I said, was back on this sort of swing low area down over here. If we get underneath these swing lows, like, I mean, look, it's down to 39.26. That's definitely bang, second effort, and you're going to start to see this thing dribble down. Let's get on a better time frame here. So there's your daily. So really all it did at the moment, if you drag this across here, is retest this breakout point. So it means you're in still a bit of a no man's land with it all. Like if you're looking for the top side here, we've got our first lower high. That's locked in here now. You've got up, you found resistance, you move back, you find support. Third leg, which I always talk about, that's your third leg through here. This is the one that's going to tell you, are you going to get a double top? Are you going to get higher high for a continuation, or are you going to get lower high? Well, obviously in this situation, we've got the lower high. So now the emphasis is really back on these lows down over here. I put a post up right up the very upper top over here and said, explained this, because a few things to take away from is the fact that we're on the bottom side of this big daily support trend that we were honoring since September. And this is why I said, look, you got to understand where in the cycle of the structure you are. And this one here, we were going to see this move up over here. This isn't enough to just break the trend. You generally kind of need some sort of little flare up back test, which is what we've just seen here. Emphasis is now on these lows down here. So the same story where we were first high, pull back, second effort for the highs. Now we're looking at the structure down here. If you think about this in reverse, if you flip this around, same deal. You've moved up, you've found well, this is actually support because the chart's upside down, but in this instance, resistance. Moved back, found support, which is actually resistance. And now, emphasis is to see what happens through here. Now, a couple of outcomes with this. Let's put this back up the normal sort of right here. One is that we drive down here, we find support again at these levels down here, 39.20s, low 39s, and then we could potentially be getting into a bit of a range move, something along these lines over here. And apart from that, the other options are that we do lower low. And if we lock in lower low, then these two yellow lines are what we're probably going to be using for new change of trend. And we're going to be seeing a downtrend because then you've locked in a lower high, you've taken out these lows, so that'll be booking in a lower low. You've got a lower low and a lower high, well, that's a trend change. And you start to look at something like this, moving back up over here. As I said, around 3,700 is pretty much my sort of target, which I've got a bigger play in play, but I do think moving back down to those levels will be enough to sort of shake out a little bit of the longs, drag in some shorts, which obviously is great because that'll add to the liquidity to get that next big move up to, potentially towards 5,000 in 2026. But for now, let's deal with that then. For now, I think that sort of like the emphasis is still moving back down over here. Third possible outcome of this, which could actually be, is that this holds. Because remember, this bounced exactly where it should at 44,030. So that could just be a retest, and we could be moving back up like this. Look, the thing is with this sort of stuff, you can sort of have a general idea, but you need to be able to sort of work out and act accordingly to what the market actually does produce. But at the moment, we've seen a pretty strong sort of rejection. That sell down was very heavy on the Friday. I think we came down, was this from around 2050. So it's a $220 sell down coming through here. Yeah, it kind of rallied a little bit and bounced into sort of close. But as I sort of say with these things, you kind of disregard that last candle a little bit. And really, that's ended on its ass. And it's ended below these supports down over here. You can see that this little bounce after it hit that 40.30 came back 4,012, which is a $80 bounce. That obviously found sellers there again. So what we'll do is we'll put a zone in here because this, you can see, was support. It's now played its role as resistance. If you move above here, you could potentially be moving back up to 41.70, 41.40s, back up to 41.67. Should you break through 41.20, most likely you've got the momentum on your side to come down here a little bit further. What I would sort of be looking for, first of all, is probably, look, again, end of the week, you can't really sort of hang your hat a great deal on these sort of numbers through here, but certainly underneath 40.30, your next target is almost, I would say, your next target is going to be 39.70, and then it's going to be 39.25. So let's put a couple little marks on these ones here and sort of say, should we break Friday's lows, which is 40.30, which is that breakout point from last week? They're the next sort of targets where you're going to see a reaction. Now, it doesn't mean that it's going to hold. It could obviously spike through and then bounce. But the thing is, if you're sort of shorting it and you're coming down here, these are the areas where you take some profit because you are going to see a reaction here. We've seen it sort of, the market obviously sort of held this a lot here. This is your break and back test levels. And then certainly once you get down to the bottom over here, this is going to be pretty much, look, you do have a couple of little lows down over here. So it's like nothing goes in a straight line, yada, yada. This is why it doesn't go in a straight line, because you've got different levels on different time frames in which you have seen support. But the idea is that if you get down underneath 40.30, then we look down for 39.70s. So that's about a $60 drop. You probably see a reaction there. Second effort, if we get a bit of a bounce and then the sellers keep pushing it down, then we start to look down to 39.20. And 39.20 was what the low was that really saw this last big move up. And these moves were quite big. Silver outperformed gold, which we kind of expected it to. But, we're talking from 39.30 up to 42.40. That's over $300. Now, if you have whatever it was that drove us up here and it comes back down here quicker, sooner rather than later, you can pretty much lock in the idea that this was the last hurrah for the medium term. You break that 39.20s, well, that's when you're kind of looking down, depending on speed, of course. You're looking down to these kind of levels down over here around that sort of 3,700 kind of level. Excuse me. Now, obviously, most likely you're not going to see that straight away, of course. Excuse me. But these are the points where you use the confirmation lines. And if we see the sellers aren't willing to step in at these levels, that's where you can start to look down to the next previous levels as to where we might sort of see a reaction from the market. Pop this down over here. So I still think we probably have at least a little bit more downside, but this 40-30 I think is going to be very crucial because it did provide that back test as it should have from a structural technical standpoint. But if we see it come back down underneath that, that kind of makes this whole area here a bit of a fake breakout. And I would say we're going to definitely hit these levels down over here, around that sort of like 39.70, 39.20, 38.80. And if those levels break, that's when we're sort of looking back down, probably another couple of $100 underneath that as well. All right, jump on, and we got silver. So silver is in a very precarious position. And as you can see, this is on the last 4 hours. I always say, hey, look, disregard that last candle. Well, this last candle did not see any sort of bounce whatsoever compared to what we saw on um, what we saw on gold 2 moments ago. And this is what I was talking about. Like, so I was like, oh, look, I said last week you had three levels that we're kind of looking at. Well, actually, two that I was looking at. I was looking at sort of this kind of measured move through here, up around to this 61% level, this zone over here. I thought, look, there's a kind of bit of a neckline here. It was the breakdown point through the trend. It was 61% retracement. I'm like, this all looks good. Uh, the second level, which I put on here, but I didn't think it was going to get there, was this measured move of potential for this inverted head and shoulders. I didn't like how deep this shoulder had come. That's why I disregarded this. It took that out. It took the other one out, and then bang, right up to all-time highs. But this rejection from getting to all-time highs, you wouldn't want to be necessarily like, there must have been some people buying around these levels. You know what I mean? With the previous all-time high, which is admittedly back down 49.80, which is almost where we saw the bounce from, um, you know, when it hit this sort of level here, it took 50 years to get back to that level. Now, I'm not saying it's going to take 50 years to get back to that level, but you've got to keep these things in mind that if you're buying at all-time highs, you better have some good stops. And that's what's feeding some of these moves. And I've said this a couple of times, I put posts up about it as well, that this is what feeds the downside beast. I know it sounds a bit cutesy, but it is what it is. People buying these things, yeah, we're going here because the silver crowd are crazy. They're like Bitcoiners. They're like, oh, look, it can't go down. It's going to $70 by Christmas. Whatever, okay. $100. Look, these things definitely could make it to those levels. But I think, as we know, it's not an easy game. I think there's a good chance that the people that are sort of buying those things with and buying into this idea, they're like, nah, it's a shake, it's a shake, it's a shake. And what do? Just buy the dip because it's going to 70. Well, what happens is when you take out that low, melts, and this is on a small, like, little section just here, right up at the highs. Anybody that's bought through this section here, what happens if when they have their stops down at 46 or they have their stops down at 45? And you get not just the people that bought in this sort of like, $2 range, but you get everybody that's bought in the last sort of, $8, $9, $10 range, and they have their stops hit. That's the kind of thing that can really get this thing to sort of hammer down a little bit more. I put it on a different chart, this one here, just to make it a little bit cleaner. But this is potentially what you're looking at for silver, in my opinion. And I'll put it on the daily because I think the daily might show it a little bit better. So disregarding the wicks, which each their own how they want to, people want to do measured moves. But for me, this is the range that we dealt with down the bottom. Disregard the wick. That's the base of the double high. If you break 46.70, most likely, I mean, for confirmation underneath the wick, so underneath 45.40, but more or less, if you break down underneath here, that's locking in the double top. And then you look for where's the measured move. Well, the measured move actually comes right in line with this little previous resistance, which it broke through, comes in at 39.50, sub 40. Now, I've been looking for 43 for silver for a while. I'm short up in these top wicks. I mean, my style is very much sort of, in out, but I've got another little smaller account, which I set up just for the basis of swing, to try and sort of get onto this thing. And potentially we could see this thing really start to melt down into the end of the year. Now, look, there's always still a chance that this thing holds around here. This turns into a cup and handle. That's why I've got this arrow here at the 50%, because 50% is kind of regarded as the fail for a handle, for a cup and handle setup. So obviously, if this were to be a cup and handle, well, this is the kind of level 50-50, call it, plus minus a couple of cents, whatever. This is the level you want to see it hold. And then sort of stuff around here, another attempt to all-time highs. Well, that's a cup and handle. That would, keep in mind, this is not what I think would happen. It's just that goes, considering both sides of the coin, that gives you nearly 58 bucks for a measured move, because the depth of the cup gets taken from the base of the handle, which gives you 57.90. That's potentially what would come. I don't think that. I'm not positioned for that. I'm not trading that. But again, it's just being aware of that, because there are, of course, there's both sides of the market. These things could potentially play out that way. We are in the midst of what could look like a double top, but it also could just sort of be people freaking out end of the week and that. And hold on, they shook out anybody that was in the last second, and then maybe it moves forward. Who knows? We'll see how it goes. So for me, the emphasis is firstly underneath, obviously, Friday's lows. So 49, I'll call it 50 bucks. Let's just put an alert down here. Drag that underneath there. I think if we take out Friday's lows, most likely you're looking to sort of undo that whole sort of drive up. Take out Friday lows. From there, you're looking to breakout point, 49 flat. Underneath that, you're looking for 46.90. I would say, quite frankly, if you break that one there, you come back down here. And if you do that and you've got a failed breakout, you're pretty much locking in the idea. And I'd almost sort of say it, if you take out Friday's lows, that 50% cup and handle is invalid. It puts the emphasis basically just on the idea that you've got a large double top measured move comes in sub 40. If you get down under here, you're going to get a lot of people freaking out. It's the same thing I said with gold as well. That look, this was an incredible move. Like, markets just do not move like this, and it's a very sort of chaotic time to be trading. But if you look at that, that's over the course of what, 5 or 6 sessions or something, 6%. Sorry, 6%, 16%, 16% in 5 days. Markets don't move like that. And this is why I said we could potentially be seeing this last hurrah. Comes right up here, clips them, and then fails and comes down here. Look at what happened to gold, lower time frame, when it was at its all-time highs. So once I clean this up a little, let's jump onto a different chart. It's a little bit cleaner. Look at this. So on side by side, just to emphasize the point a bit. This one on, whoop, oops. All right, this is incredible sort of viewing. But the point is, if we look at this setup here, yeah, one's on the daily, one's on the one's on the daily and one's on the 4 hour, that's fine. But the point is with this stuff, structure is the same. It doesn't matter what time frame you're on. You know, there's more significance with higher time frames, which in this case, actually, again, it just emboldens and strengthens the idea that we could be starting to see some serious downside. This is gold. Sold down quickly, silver, sold down quickly, flew right back up, flew right back up. This is what I'm saying. This was the last hurrah. This is what I talk about every single week. I say, look, you got your three levels here. You move up, you find resistance. You move back, you find support. This is your third leg. This is your tail leg. What does it do? Comes up here, finds resistance again. What happens next? Puts the emphasis on these lows. And this is where we're at the moment. If you look at here, this leg has put the emphasis back on those swing lows. This is exactly where we are right now here with silver. And what happened with gold with this setup? Took out the lows and absolutely melted down to the underside. We could potentially be at this point here with silver right now. If we get back down to these lows, what's going to happen? Most likely this. Because you get all the people that bought it up, and then all the people that thought, hey, here we go, and we're going higher, higher, higher. They put their stops. Well, textbook told me to put the stops down underneath here, melts down, bang, and that could really crush it. And as I said, if this comes, I wouldn't be surprised if we see sub 40. You're going to see people freak out because the silver crowd are insane, and they sort of think that it can only go up. Well, yeah, I mean, I think they've had a lot of years of it stuffing around, but since it started to move, it has absolutely rocketed. But the thing is, the market knows this and knows that that's an easy way to take it out. If you're going to take, like, if you're the big powers to be, and this again, where's my tinfoil hat? Put that on. If you're the powers to be in that, and you want, and silver's going to $70 or it's going to $100, where do you want to accumulate? Do you want to accumulate at 53 or do you want to accumulate at 40? Think about it. They don't care. They're not trading this thing in like the flipping pips. But the point is, there's a lot of things stacking up, lining up that potentially could give us sub 40 for silver. And then we could see some support come in, and then we start to see things rip up. Because if you look at sort of what happened to gold, didn't come down and then come straight back up. No. But where did it come back up to? Well, it came back up to right back up to that level of the swing low. So it means it come back up to 46 and then it sold down here again. So we could be into something that could take quite a while. And this is what I'm saying that, you know, the people that have been buying up here could be setting themselves up for a fair bit of a wait to get even again. As I said, we've seen these things when it's hit all-time highs. It took 50 years to come back to it. I don't think it'll take 50 years to come back to it. I actually think we'll probably see higher highs through 2026. But given the structure that you can see here with the double top, yes, it can come back up here and retest, but maybe it sort of breaks down here, completes the measured move, and then sort of comes back up and the highest it gets to 46. And the people that tried to buy the lows down here, what do? They sell their positions and it pushes it back down. And you could start to see sort of playing around in the low 40s, low 40s, 30s kind of level for the next 6 months. So I certainly wouldn't want to be sort of buying or holding this thing a great deal up around the top over here if you're long. But that's just me with it all. All right, let's keep ticking on. So yeah, basically, I think in short with that, if you take out Friday lows, I think that's going to be confirmation, early confirmation that we've got some pretty strong downside coming for silver there. Onto the dollar. The dollar is something that could really get it going if it wants to. I actually didn't see this bounce through here. I mean, what time was this? It was late, but we saw it quite at night. That's a good bounce through here. Okay, so dollar. Now, this is in a bit of an odd sort of position. We got a bit of conflicting technicals happening here, but the technicals we've got with this is we've got this rising support from the lows. It's broken that. So you would think, okay, if it's broken that, well, maybe that's a break of the thing, retest, it could be sending it down lower. Could be the case. Um, the flip side of that though is if you stand back from this thing, this one just here, let's make it a bit thicker. look at where it is in relation to its bounce from the lows. Really can't stand sort of while this thing's a bit slow here. Just a different color. Let's go with whatever, just for the argument, I'll say yellow. Here's the lows. Excuse me. Lows bounce high. We're not even at the 38%. 38% is strong continuation number, sort of fib retracement. So that's actually still considered bullish. Yeah, it's kind of rolled a little bit here, but certainly it's not back what we've been seeing the whole of this year, which is a very much lower levels. So the fact that it's broken this sort of support through here, I'm not completely shook by. Yeah, I thought this pullback would have sort of fired up here a little bit earlier. Again, this is one of the things that, you know what I mean? Like, this is just my analysis and how I sort of trade on it. But I called this negative divergence pullback down over here. I said, look, through midweek, we're going to see a push up here. It got slapped time and time and time and time again through here, broke through, down, down, down. This little bounce up here actually sort of is somewhat actually kind of bullish, believe it or not, because this is the chance for the market to sort of go down. This is one of those little high heel bottoms where it's dribbled up, fast down, fast up. That's that sort of little stiletto bottom, or heel or whatever it's called, the little foot part. If this breaks through this level here, we've got a bit of a falling resistance. You've got this little high heel bottom. We've got a negative divergence coming down into this lows down over here. I think that's really going to put the emphasis here. 99.7. I think 99.7 is going to be a big key level to get back up above. Above 99.7 would actually negate this sort of breakdown of this rising trend, push it back up, and you start to be targeting this gap up over here for major breakouts and continuations. And if we see metals come off, that's how I think that we may see US dollar actually feed that downside move with the metals. So I'm not completely sort of out of dollar camp. It has certainly been an abusive trade for a long time. But the fact that we still haven't even broken the 38% retracement, we've got a negative divergence. I still think I'm not counting it out yet. And particularly if I think that, which I do, metals have more downside, I think those flows are going to be sort of coming into metals and that, into the US dollar soon. And on top of this as well, as I said, you've got these Fed speakers coming out. And look, the Fed speakers aren't gospel, but you've got the Fed speakers coming out and the market reacting to it that the Fed may not cut in December. If they don't cut in December, again, that's going to be upside momentum and upside strength with the dollar. I still think we have further to go with the dollar. Quickly tick along here. There we go, 1 sec. All right, and tick along. So what have we got here? We got Aussie. Now, Aussie has been continuing to be a tough trade. As you can see here, I had this little price target. I thought, oh, if we get down underneath this support here, it was a pretty clear-cut move down to price target over here. We did. We saw this thing little rally back up into the end of the week there. Just to unpack the Aussie a little bit, this was where we had that jobs data come out. And this is what I was talking about at the start of the vid, where I was saying that, hey, look, you know what? The jobs aren't the issue that the RBA have got at the forefront now. Inflation is. How do you deal with inflation? You hold rates. Hold rates, strong for the currency. Bang, moves up. Market says, hey, that's great, good on you. We had this was the plan actually. If you look at last week, was to move up here and then move back down over here. So we did get that drive up here. We had a confluence here, 78% retracement, falling resistance, and and this horizontal, which you had sort of marked out through here. So if you have a look on the daily, this falling resistance here, we're starting to really see this structure start to fill out. And this is why I put that target up over here. I honestly kind of thought probably around the 61% would have been the cap for it all. And obviously it overshot it a little bit. But the point is that it is starting to fill out this structure pretty well. If we see the dollar run, Aussie doesn't matter if we're going to hold rates. We're not hiking rates. All they're going to do is hold rates. Okay, well, against the US dollar, well, now we're talking about the Fed potentially holding rates. It kind of takes the shine off the fact that the Aussie might be holding rates. Then you sort of chuck into the fact that if we do see DXY, which use that as a barometer, call that the market sort of consensus and towards the or sentiment towards the US dollar as a whole, if we start to see that break higher, you've got the RBA and the Fed both holding. Well, that's not going to be bullish enough for the Aussie. We potentially are going to see a little bit of downside with equities coming off all-time highs as well. Now, Aussie just has not really responded a great deal through this whole year. It's been buoyant, but not breaking out, not moving higher. So it hasn't been super strong. It just hasn't broken down. Um, this structure I expect to fill, which means at least I would say another sort of drive down towards these levels over here, around that sort of 65. I do believe we probably do still have sub 65. I actually think we have lower coming because I do think the dollar's going to run. I think metals are going to come off, and I think equities are going to come off. And I think all those flows are going to go into the US dollar. Those factors of equities coming off, I mean, Aussie is a risk thing. So typically in previous times, had equities been at the highs, Aussie would be at the highs. Metals at the highs, Aussie would be at the highs, or at least helping and push that along. We've seen metals, all metals, copper, silver, and gold, put in new all-time highs. Aussie has, for the most part, just been sideways. We're at the same levels we were back in June. We've seen equities continue to put in high after high after high. Aussie not responding. Now, if they're not buying it with all these sort of factors that should be, creating that kind of risk-on environment, what happens when they go off and they go, well, hold on, wait, the people that were buying it, even they don't turn up? Well, that's going to add to a double strength move to the downside. And so I do think, particularly if this scenario plays out into the end of the year, and this is kind of how I'm sort of, trying to sort of position myself and trade towards, that we see a bit more of a risk off thing. We see equities come off. We see the dollar run. We see metals come off. I think they're going to dump the Aussie. And I think we've got sub 62 into the end of the year. That's my sort of feeling, or maybe not sub 62, but into sub 63, into the 62s. I do think that's probably the direction that we are going to sort of be going. But that's a broader view. We did see a bit of a rally into the end of the week, so not too bad for it there. But in saying that, look at the RSI off that bounce. It didn't even move. It's still oversold, even though this thing bounced from 65.04 up to 65.50. RSI, the buy thing about RSI's buying pressure, market moved up off what? There's absolutely no buying pressure here at all. So look, if this thing continues to hold and move and drag higher, well, yeah, it'll turn the RSI up, and okay, you can move up here a little bit more. But as of right now, that's not where you want the RSI to be sitting at 12, while it's trying to bounce and trying to move back up, because it's just showing no support. If you look at this last move through here, moved up through here, continued to move up, okay, yeah, that's fine. Still came down to it all. So yeah, to me, I just sort of I feel that yeah, this might be a bit of a short-lived bounce. We see how we go though. As I said, I'm still positioning myself for the Aussie for US dollar to be a bit stronger. Um, that's fine. Okay, that's the broader sort of view of it all. What can we use as a tradable kind of level? Well, as I said, I'm looking down, so I think a close underneath 65.15, because as you can see, we've sort of held this zone, held this zone, held this zone, held this zone. Even this little spike under here did react up over here. You want to see an absence of sellers here. Sorry, buyers. So whereas you've got a buyer here, buyers, buyers, they were sellers over here. Once we sort of see an absence of the sort of buying come in at this zone, 65.10, 65.15, then we can start to see this move down towards price target here. But for me, it's just a little bit, okay, this thing could bounce, could come up a little bit higher with it all. I'd probably wait. To me, I think that is a safer kind of trade down here, which is 50 points or so. But you're going to see a reaction down here. If you look at this actually, and then sort of have a look at what we've been dealing with on the daily, this is the same sort of deal here. Unable to close, unable to close, unable to close. All these sort of times here, and we've got little wicks down underneath each time. But eventually, if you hit it enough times and you can't get underneath there, what does it do? It springboards up. Same sort of thing, came back down here, test, test, test. We've got the same thing at the 4 hour here, and then the test will be on where the price target is, 64.80. And if we see a close underneath 64.80, that's when we start to see a break back down towards 64.20. So for me, underneath 65.15, a close there, we look down to 64.80. Underneath 64.80, we look down for 64.20. So, but I am still sort of looking for downside on Aussie there. All right, flow through the last ones here. So we got USD against China, the one. This is a third attempt coming down here. Got absolutely blasted down into these lows here the other day. We had a bit of a negative divergence on the 4 hour, which just still failed. So we can definitely delete that now because that did not play out. But we have seen three support tests of this support level down here. It is holding it for now. We've got to sort of see, obviously, what they do here. This is a big zone through here, and I really think outside here is what's going to give us our direction. So below 708, above 715, then I would look for more of a sustained trend change with the yuan. Copper on the daily is bouncing and holding. This is a good example of how these breakdowns happen, though. So you got the initial breakdown. Here's the trend. The initial breakdown, bit of a fluff around, comes up, tests the underside of that trend that it was supporting. So now the emphasis is on these swing lows. So this level down over here is where I kind of sort of feel again that we'll probably start to see a move down, and we look for 470 down underneath there. But again, look, I haven't actually been trading copper. It's a bit risky for me, for my liking. You do potentially have a bit of a head and shoulders setting up here as well. So if we were to sort of call this, again, this is just another view of this. It's not a particularly nice, neat head and shoulders, but measured move for this, probably coming around that price target, I would say. Yeah, pretty much into that price target. Which again, look, when you start to add a few of these things together, there's a little head and shoulders. This one here, like that. Um, it's a bit wonky with the shoulder here, but in theory it does work. It has that straight neckline. That's just one view of it. The other view obviously is also, as I said, this trend break. And this is kind of what we saw with gold, as I was saying earlier, where you get the break, you get the fluff around, you come up, you retest the underside of that thing. The emphasis is still down over here. And if you can't break 497, okay, fine, then you can play around at the top over here. But I still think the emphasis is going to be on this 497. Then because this is a head and shoulders, I do think you could potentially be breaking that and looking down to sort of 470. So that 470 is still my sort of target, which goes in line with, as I said, a bit of weakness to come on the metals into the end of the year. All right, that's it from me.